All right, you're welcome. Let's look at demand and supply entry modules. Like, what should we do when we now spot a demand zone or a supply zone that the market has already gotten to that place? Still using the idea of top-down analysis. What do we do when price get to demand and when price also get to supply? How do we enter the trade? That is going to be our entry modules. So now, like I said before, we are using top-down analysis, and there are three major modules with everything in between. Anytime I use this statement, everything in between, meaning that there are rules and regulations that are guiding these modules for you to be able to work effectively. All right, there's nothing 100% in trading, but we just want to make sure that yes, we are doing it the way it's going to make us profitable. Now, let's go to the entry modules. Number one that we have here is the direct entry with or without indicators. All right, direct entry with or without using indicators. And if we want to use indicators, we are going to be using stochastic oscillator. There are a lot of indicators that can be helping, but from my previous studies and observations and backtesting all those things, stochastic oscillator is kind of okay. And we can also do it without an indicator, whereby we just look at only the chart and then look at the candlestick pattern, looking at our morning star candlestick, our evening star candlestick, bullish engulfing, bearish engulfing, and then try to spot our fresh zone, all those informations there. Now, looking at number two, I'm going to explain each one with their own diagrams and explanation. Now, looking at number two, we're going to be looking at change of character or direction entry. All right, when we will see the market get to a monthly supply or demand zone, how do we now enter it on the corresponding time frame? Monthly, we spot a supply zone there, we'll go to daily. Then how do we see that when price now come to the daily supply zone? What can we do when price get to there? Can we enter on the daily? Can we enter on the weekly? Monthly, weekly, and then daily, so on and so forth. That's going to be our topic on that number two. Then number three, continuation and confirmation entry. How we're going to enter the trade when price has already given us probably number one and number two. Can we just say, okay, if number one and number two has already been given and market has gone past all those stages, can we tag along? Can we continue to trade it? Or what are the other confirmations we need to say, okay, yes, let's enter this trade, or we should ignore it? We're going to study all those things. So let's look at our entry module one. And entry module one, like I've explained, is a direct entry without indicator and with indicator. So in this scenario, we'll be looking at direct entry without indicator. What do we have to do there is this. What we have to do here is this. We are first of all going to identify a fresh demand or supply area. And when I mean identify, meaning that we're going to look for a demand or supply that is still fresh, that has fair value gap, that has space in between them, like I've explained in previous video, right? So number two, we're going to place a buy or sell order when price gets there. All right, and the sell order can be a limit order also. We can enter the market directly also and say, oh, okay, market has gone to this place, so yeah, we are selling, we are buying, without using any indicator, just by spotting a fresh supply or demand zone when market gets there, and put our take profit and stop loss. Just like I've explained here, we spot a supply zone, we just put our buying and selling signal there, and we tag along. If we are buying the same thing, if we see it that okay, this is a fresh demand zone, we just tag along. It can be also effective without using indicator. Now let me explain it more better. Like I said, maybe price is coming and giving us different type of zones. Maybe the first zones it will give us is not a fresh zone, and then maybe it is not the upper zone that is fresh. We are not going to be using this zone. Even when price come to it, do not go to corresponding lower time frame, because it may be useless. Price will just come above it and take out your money if you put your money here. So where we are going to have an effective type of trading is when we now say, okay, it is not the fresh zone we're going to be using, and I've explained it using candlestick pattern, candlestick recognition pattern here. Candlestick 1, 2, and 3. You can see that this is a very fresh zone. Why? Because the low of candlestick 2 and then the high of candlestick 4, in between them there's space, and this space is now a signal that yes, when price come back to this place, we are going to be selling accordingly. We can now place our sell order there without using indicator. All right, so but looking at this other one, you can see that candlestick 5, 6, 7, 8, look at the low of candlestick 6 and look at the high of candlestick 8. They already collided, so therefore we cannot use this supply zone of candlestick 6 anymore because it is already taken. That is just what it means. All right, so let's look at the 1B of it, which is direct entry with indicator. And the type of indicator we're going to use is stochastic oscillator type of indicator. Then we have to take note when price gets to the demand or supply zone. That's on the chart first of all. Even if we have applied this stochastic oscillator, we have to first of all look at the chart, the candlestick, and see that yes, demand zone or supply zone is fresh and price has gotten there. Then when price gets to the overbought, now in this time we are going to be looking at the indicator now. This indicator, stochastic oscillator indicator, when price gets to the overbought or oversold zone. So how this indicator works is just it has overbought and oversold zone, meaning that if price has been overbought, then we can now say if price has been oversold and get to that zone, we can now buy. That is just the confluence we'll be looking for. Now this adds more confluence for the trade to work out. So what I'm trying to say is, if I'm using this oscillator in addition with our demand and supply zone that we have now spot, if we now use an oscillator with it, it will have more confidence and have been giving us more reason to enter the trade, and it might probably play out the way we want it. Now let's look at this example. Let's assume that this is a daily time frame supply zone. We have identified that this is still fresh, and always remember, how is it fresh? Because this low point and this other number 3 candlestick, the high point, there's space in between them, meaning that with this we can now see that when we now switch to the lower time frame, we can see when we now switch to the lower time frame, maybe from the daily to the 4-hour, when price now get to that place on the 4-hour time frame, or even without switching on the daily, we see that this is supply zone on the daily. We wait for price to get here. When it gets here, what do? We now look at the indicator. Let's look at this. This is the stochastic indicator. This is how it looks on the chart. All right, you can see that this first point, first lines, this first 2 lines at the top is the overbought zone, and this first 2 lines at the bottom is the oversold zone. All right, so now look at these 2 candlesticks, these 2 lines, the green and the white, So mostly when the white and the green lines, they now cross into this zone of the overbought zone, meaning that price has been buying. There's not time for you to sell, and to add more confidence for you to sell, is already in the overbought zone first thing first, and also we now have a supply here, so we don't have to switch to any lower time frame. If you see this type of structure on the daily time frame, and we mark out our supply zone or demand zone, and price has now gotten to an overbought zone on the oscillator, all we have to do is going to be setting our entry, put our stop loss, and target any point we want. Then we can now sell this trade confidently, believing that it's going to play out. And we can see most of the time that this green line is going to cross over the red line when it gets inside this overbought zone. When that happens, it's more confident that there's high chance this trade is going to play out, that this supply zone is going to hold, that trade is not going to fail it. So that is just how it plays out. It's going to play out most of the time. This is all about trading entry for demand and supply. When we are using entry module 1, either we use with indicator or without indicator. Thank you.